All right, let's get right into it. Picture this. A nation of 1.4 billion people suddenly decides to completely rewrite the rules of global energy. Now, this isn't some far-off prediction. This is happening right now, as we speak, in February 2026. What we're about to unpack is a radical new blueprint for India's future, a plan built on quiet oil discoveries, shocking alliances, and a war chest worth billions. And you'll want to stay till the end because I'm going to reveal some shocking things about how these pieces connect. It's a master plan that's so much bigger than any single oil find. Let's get back to it.
You see this sentence? This is everything. This is the core of the entire new doctrine. For decades, India's heavy reliance on energy imports was seen as its Achilles heel, a critical weakness. But now, in 2026, the strategy has done a complete 180. Every single barrel of oil, every cubic foot of gas, it's now being seen as an instrument of national power, a tool to achieve one single crucial goal. And this is that goal: strategic autonomy. I mean, think about what that really means. It's the freedom to act on the world stage without worrying that some other country is going to hold your energy supply hostage. Every single move we're about to look at, from a tiny little well in Gujarat to massive deals in the Middle East, is all designed to build this exact independence.
So where does a revolution like this even begin? Well, it's not with some huge explosion, but more like a whisper, and in a place that a lot of experts had frankly written off. Let's look at the first piece of this giant puzzle.
You know, what's really fascinating here is who broke the news. It wasn't one of the state-owned giants. Nope, it was a smaller company, Asian Energy Services. On February 3rd, they announced the find in what's called a mature basin, basically an area that was supposed to be past its prime. Nobody saw this coming.
They drilled down 1,650 meters, and at that depth, their well, they called it NM01, didn't just find a little bit of oil. It hit something really significant.
And here is why this was such a game changer. They didn't just find oil in one spot. They struck high-quality light crude in 3 completely separate geological zones, one stacked on top of the other. It's like digging for treasure, finding a chest, and then realizing there are 2 more chests buried right underneath it. It proves there's way more potential in India's own backyard than anyone thought.
And you don't have to take my word for it. The managing director, Kapil Garg, said it himself. In this massive quest for strategic autonomy, every single barrel you can find at home counts. This find just reinforces that whole idea, that real energy independence has to start at home.
Okay, so if Gujarat was the quiet surprise, what was happening over on India's east coast? Well, that was nothing short of historic. This is where you really start to see the true scale of this ambition.
Just look at this. For decades, the state-run behemoth ONGC and the private titan Reliance were bitter rivals in the Krishna-Godavari Basin. They fought over everything. But now, they've signed a deep-water resource sharing pact. It's almost unthinkable. They're now sharing everything: pipelines, rigs, supply ships, putting the national interest way ahead of their old corporate rivalry.
So what's the point of this new alliance? It's not just for a nice photo op. It's all about one thing: speed. By sharing all that expensive infrastructure, they can slash through the red tape, skipping the usual 45-day approval cycles it takes to move equipment around. The actual tangible goal here is to fast-track this massive deep-water block, KGDWN 98/2, and get it into full production way faster. They're targeting the first quarter of 2027.
But this whole strategy isn't just happening inside India's borders. At the exact same time, the blueprint is expanding outward. It's about shifting India's role from just being a customer in the global energy market to becoming an owner.
And this is the key term you gotta understand: equity oil. It's simple, really. This isn't about buying barrels from another country on the open market. This is about owning a piece of the oil field itself, operating the drills, and having a legal right to the crude that comes out of the ground. It's a fundamental shift in power. And here is a perfect example in action. A joint venture between Indian Oil and Bharat Petroleum, this new entity called Urja Bharat just hit a massive discovery in Abu Dhabi. This oil is literally owned by India. This gives the country a powerful shield against crazy market swings and geopolitical drama. Because even if global markets totally freeze up, this oil will keep flowing to Indian ports. Okay, but what happens if the worst-case scenario plays out? What if a major global conflict breaks out and supply chains just get severed overnight? Well, that brings us to the nation's last line of defense.
74 days. This number right here represents India's ultimate insurance policy. As of right now, February 2026, The country has enough crude oil stored away in strategic reserves and commercial tanks to last for 74 days without a single drop of imported oil.
Now, as this chart shows, we're at 74 days, but the international standard, what the International Energy Agency recommends, is a 90-day supply. And while 74 is pretty good, it's not comfortable. And that's exactly why the government is hitting the accelerator on Phase 2 of its reserve building project in Odisha. They are racing to close that gap and make the country truly shockproof.
So, the big question, how do all these strategic chess moves actually translate into the real world of money and markets? Let's connect the dots.
So if you're an investor, you might see the daily stock price for a company like ONGC dip a little on news of peace talks somewhere in the world. But you can't let that daily noise distract you. You have to look at the fundamentals underneath. I mean, today, February 18th, is a dividend deadline. These companies are paying out huge returns to their shareholders.
And here's the engine that's funding this entire revolution. In just the last quarter, the three big oil marketing companies, IOC, BPCL, and HPCL, posted a combined profit of over 23,000 crore rupees. This unbelievable amount of cash is what gives them the power to invest in new exploration, to buy up foreign assets, and to fuel this entire national strategy.
So when you put all of these pieces together, the small domestic finds, the giant strategic alliances, the global acquisitions, and the incredible financial firepower, a very, very clear picture starts to emerge, a clear road forward.
This is the vision for 2030. The goal is to slash that import dependency from a massive 85% down to 70%. Now, that might not sound like a huge jump, but it means billions and billions of dollars stay inside the Indian economy. It means a stronger rupee, and it means building the stable energy foundation you need to achieve that national goal of Viksit Bharat, a developed India.
Which really brings us to the final, critical question. We've seen the blueprint, we've seen the progress, but when you look at how unstable the world is right now, is a 74-day shield truly enough of an insurance policy? Or does India need to move even faster to hit that 90-day target? I'd love to know what you think, so drop a comment below.
Thanks so much for joining us for this deep dive. If you want to stay ahead of the curve on global strategy and geopolitics, make sure you subscribe to the channel. And definitely check out our next explainer, it's popping up on your screen right now.